Most people look at their credit report and only see a score, but lenders don't look at your score first. They look at risk factors. And today I'm going to show you what those risk factors actually mean and why they're keeping people from getting approved.
Okay.
Okay.
Yes, ma'am. And so it says too many bank card or revolving accounts with delinquent or derogatory status. Okay. So if you can read that out for me.
Yes. Bank card accounts include credit cards and charge cards from a bank and are frequently revolving accounts. Revolving accounts allow you to carry a balance, and your monthly payment will vary based on the amount of your balance. You have too many bank card or revolving accounts with payments that are at least 30 days late and or on which a lender has reported a derogatory status. People with late payments are at risk of being overextended, putting existing credit with lenders at risk.
Okay. So that's pretty self-explanatory as it relates
Yes.
to it. So I don't think I need to go more into detail. They went more into detail as it relates to this particular factor.
Yeah.
So, but that's more self-explanatory than the first one. Okay, so click on the next one. Like a sufficient relevant real estate account information, and I'll talk about that as well. If you can read that for me.
Okay. A real estate loan can be a first mortgage, a home equity loan, or a home equity line of credit. The Vantage Score credit score model relies on information in your credit files at the three national credit reporting companies to generate your score. Your credit file does not contain enough credit behavior information about your real estate accounts. A mix of different types of open and active credit accounts, including real estate loans, you can have a positive impact on your credit score,
Mm.
or can have.
Yeah.
Okay.
Yes, ma'am. And so, yes, and so that's what I was explaining earlier is that the first thing is having real estate on a credit report that really heavily impacts the credit report positively because
Okay.
it's real estate, it's a large loan,
Yes.
and it also it's an asset and it can be leveraged and used for various things. So having real estate on a credit profile can help, people gain access to
Mhm.
other avenues of capital because it's showing that they are paying a large loan, um, that, a large loan, which is, much larger than any other loan that we're
Yeah.
going to obtain. And so, yes, ma'am. So as it says, um, that her credit file doesn't contain enough credit behavior about real estate. And so when she does eventually purchase a home, then that's gonna really impact her credit scores and give her it kind of really open the door for many other things as it relates to funding, etc. So
Mm.
yes,
Okay.
ma'am. And so, yeah, and as I said at the very end, a mix of different types of open and active accounts, including real estate loans, can have positive impact on your credit score. So, when you're helping them, you can let them know that, and again, you're going to be offering funding to people too. Okay.
Yes.
So I'm going to plug you in with my funding partners. And then when you offer funding to them, loans, et cetera, that's going to build their credit profile. So they're going to be able to obviously be making payments. But when they do open a new loan, then that impacts the scores positively. And then that also, that opens doors for other loans and lines of credit. And it's like, they can stack and build and do other things. So yes, ma'am, you can be offering funding to people when they sign up for your services through my funding partners. Okay.
Okay. That's cool. That's a
Yes,
good
ma'am.
note for myself
Yes,
with the
ma'am.
real estate. So,
Oh, absolutely. Absolutely. Yep. And you're gonna do it. You're gonna do it. Okay. So the next one is it says the total of all balances on your open account is too high. So if you can read that for me.
yes, the total that you owe on all your accounts is high. Maintaining high balances has proven to be risky behavior because you do not have much credit available should it be needed, creating a greater chance of becoming overextended. People with high credit scores keep their account balances low.
Mhm. Yeah, and that's pretty self-explanatory as it relates to the balances.
In 30 days.
Score 100 points within.
This is what I got for instant approval.
Here and give a testimonial about credit.